Good evening. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this is for Monday, a cold Monday in Chicago. I don't think we got beyond 35 or so it's a cold Fahrenheit day, if you will. And this is for November 15, 2021. So we saw the signing today by President Biden of our infrastructure bill. Supposedly, President Xi and President Biden had a lengthy conversation, virtual conference. I know that our president's due to meet the president of Mexico, and Mr. Trudeau of Canada, and they're going to talk more about trade and opening the border, which has just occurred today, and everything's much improved, as you can imagine. But we've got to be watching the COVID. Now, let me tell you about COVID, because this is important. Then we'll talk a little on inflation and get to the charts. The COVID numbers are going up. We were told worldwide they'd go up as we enter winter, flu season, and they're going to go. The good news is, because more people are vaccinated, those that get it have a milder case, and a lot of people don't get it. Those that are not vaccinated are the problem. They're the problem for the other people that have been vaccinated, don't want to get it, but they might get it from them, and they're a problem for themselves. I can't change what it is. That's what it is. In Chicago, I now understand that they're saying that in our city government, 90% of the people have reported about their vaccination status, and over 80% plus are vaccinated, with some departments hitting 95% plus. The police force is still the holdout, and they're the lowest number from what I'm reading. New York City today said, hey, COVID shot for everybody that had one 6 months ago. So if you've had a shot, you're qualified now to get your booster, whatever it is. As you know, children, they're getting shot with the vaccines all over. Now into inflation. I did a show today, probably about an hour ago now, in Australia, Sky Business, and talking about inflation. Let me bring up a point. You go out for a steak dinner. When's the last time you saw the price of that steak fall on a menu? So when they raise prices, I'm just giving you the typical part, they stick. I get it. So certain items stick, but other items, such as there'll be price wars over refrigerators and other items that eventually hit the supply chains, don't stick as much. Corporations will, big ones especially, eat as much as they can within staying profitable of those items, figuring prices will pull back, they won't have to raise their price and get down the road into a price war with it. But for the shorter term items, the ones that are here today, gone tomorrow, now the price you're going to get's probably up. Coffee's a good example. When's the last time we saw Starbucks or Peet's or any of these big chains roll back prices? They're very quick to roll them up, right? We see them go higher. But there's always excuse for that. Labor costs, there's the price of the bean went up, tea went up, all these other ingredients, the rent. But when those prices go down, and you know, rents rarely go down, but they can, especially in pandemics, they did in many areas. I understand Chicago didn't fall as much as people think, but that does occur. Do they change the pricing? Not really. They'll change the size. Yeah, think what Hershey did. Go buy a Hershey bar. It's a narrow little thing. Remember how wide and big they were? Those days are long gone. I'm sure you can get them for a very expensive price, but that's what starts happening. And you see it in other items. You'll see it if you go, you got to start looking at how much things weigh. That's how they get you on inflation. If we look at Tesla, there was a gap in the chart. Now, whether it fills it or not, I don't know, but when I told you that you've left it and watch out, you might come back to fill it, I feel pretty darn good. That was how I left you when I went away for my vacation, right, in Mexico, and prices have come down. Is Mr. Musk through selling? I don't know. Somebody's buying it, and they're probably buying it at good numbers as they're using that to pull back, and they'll think, the Tesla fans, that this stock's a $2,000 stock. I hear that number all the time. When I look at the chart action, it's bearish. You have lower highs, lower lows as a chartist. The market fought a battle a couple of days ago right here at the 18-day average. It caved in on that number on Friday. It's following through today. I would love to see it finish the gap, just get it off the chart, and then see the market zip around from there. Do I think it's getting back here? No. Do I think Mr. Musk is going to sell that much stock to hurt it? No. I think the mass of what he's doing is probably coming to an end. You got to crack up that he's even bothering himself writing Bernie Sanders over the weekend and getting into a Twitter, whatever you call that, craziness. I've done that myself. I'm no Mr. Musk, of course, but you make stupid choices and you just pick a battle and it's not a good battle. Lower highs, lower lows under the 18-day average, a lot of support with the Bollinger Band racing forward. Wherever this comes in is going to be, to me, the low of the market. Am I saying price has to go there? I am not. I'd love to see it fill the gap, but it doesn't have to. It's made a pretty good move. It was supposed to make something towards there, and I say this because it's oversold. Is there a reason to be long? Not on this chart, not yet. So that's the other side of the equation. Apple ended its decline, but it's also not in an uptrend. It's now entered that pattern of going sideways between the higher and lower Bollinger Band. I was hoping it would have hit that 100-day average just because it's classic textbook, but it didn't have to. And this rally back, okay, momentum flat. Market seems to be drifting now. ARK, still in some trouble. It had that bounce, and now it's got an outside day down. Will the market make a run for the 115.61 lower Bollinger Band? It could. If the market takes out today's high, Monday's high, which was 119.05, if it takes it out on Tuesday or Wednesday, I think you'll make a very fast run for this area. If it doesn't, the Bollinger Band remains in play. There is no downtrend. You ended that. You're not trending at this point. You're drifting. The XLI spider, overbought, still in an uptrend, pretty good resistance right up through here. The semiconductors, are they going to embed? Now watch this. If we take a look, we take off today, both numbers over 80. They were both over 80 in the slow stochastic there. They were over those numbers also on Thursday. So Thursday, Friday, today. That's an embedded reading. If you've taken my embedded course, you learn on the enhanced Bollinger Bands, when you get an embedded reading, there's a certain set of actions that take place. I'll tip it by saying to you, I think the pros are going to buy the break and they'll bail if you get a reading on the red number under 79 on a closing basis. Other than that, I think they're going to be looking for the market that if it can clear this high, to maybe make a run even for those old highs. CNS, and I was looking THCX, so I've been looking at the cannabis stocks. I think they're at the point where the pros are taking money off the table. That's what I said this morning in my paid subscriber videos. That's what I'm saying to you now. Just take a look. You're at the upper band. You're overbought. First challenge. What are you looking for? I guess you're looking for up there. I'm not. I'm looking for the pros to take money off the table here. It's overbought. Let it correct a bit. In the home builders, XHB, you're still embedded. Until you lose that, I say these pullbacks are where the pros are buying. They're taking money off against the upper Bollinger Band, continue buying, and they bail on the whole position if you get a reading under 79. In the energy sector, I've been in the downslope, and today I want to reverse course and say go neutral. So I've been looking for a challenge at the lower Bollinger Band, got what I wanted. Did it hit it exactly? It missed it by 16 cents. I'm comfortable. It made its run with an outside day up. Time to be sidelined as I see it. You have a higher high and lower low pattern. Emerging markets. This is, again, a test of a key moving average. Why would traders think you're just going to burst through it? Is there some news out? I don't see it. So as a market technician, this is your resistance point. So if you've been long at all, and I'm not saying you were or weren't, that's your resistance point. You're looking for a pullback from there in an overall uptrending market. In the gold market, are we embedding again? So we look, both numbers over 90 today. Both numbers Friday over 90. I'm sorry, 80. They got to be over 80. Both numbers over 80 on Thursday. and both numbers on Wednesday. You've got your embedded reading. And that means to me on the pullbacks in the market, what do I think? I think the pros are going to buy it. I think they'll dump their position if the red line closes under 79. And on pullbacks, they'll continue looking for the upper Bollinger Band to be their target number. Gold miners, not the same. This is a bullion play, not this. It was interesting, too. This morning I was reading, or maybe it was over the weekend, that ETF money has not moved into gold. It's been more futures-based than it is the ETF-based. Here, you're at the upper Bollinger Band, overbought. Nah, bye-bye. There's better things to do with your money. COPEX. Okay, you're pulling back into the support again of the 100-day average, but this is the way to be looking at it. When the market broke down, on the way up, this is your first resistance, second, third resistance point. The market should fight a battle. And that's what you're in. You're fighting the battle right now. But if the world picks up in the economic programs, this market comes alive. Copper's needed in all these products. So it's something that you keep an eye on. Are we trending right now? No. You have a lower low and a higher high. TLT, I'm bearish long term. I mean, I realize that tapering's beginning, and that means they're still putting money into the system, but I'm not looking for interest rates to drop anymore. I'm still positive on the world economies, and I realize, as I told you, the COVID cases are going to make headlines again. You're starting to see shutdowns in the Netherlands. You're seeing Austria getting a shutdown, and they're going after people that aren't vaccinated there. They're saying, hey, you have your right to not be vaccinated. You don't have a right to go to a restaurant. You don't have a right to be around anything public. You don't have the right to spread your disease. And, I'm of that opinion. You may not agree with me, but my gosh. I got the vaccines. If you join the Army, you don't want to get a vaccine. Well, how many vaccines are you getting when you join the Army? I know people are saying, well, in the Army, I don't want to get the vaccine. Folks, every time they get deployed to Africa, whatever, how many vaccines you think they're getting and even get in? Do you think they really know the difference, or is it just, I don't want to do it? I question some of that thinking. Not all of it, not in every case, obviously, but some of it just makes no sense to me whatsoever. Logic at the end of the day wins out, along with science. And no, I don't know 5 years from now, 10 years from now, that taking all these shots won't wipe out humanity. And I think that's their argument. Nobody knows that. What we know is that with the vaccine shot, you're better off than without it in fighting this COVID issue right now. Lower highs, lower lows. Could you make it down here? You could, but you're probably going to churn more or less in that general area with a bearish bias. And last, in the euro currency, what a collapse. Today is. Somebody just threw in the towel. The markets just said, enough. They don't like what they're seeing, and away you went. That's a new break low. And if you look at Europe and you have the money to go, this is probably a great time to be on an airplane going there and spend, especially if you have dollars. I want to repeat, we're going to have the live webinar for you. And this webinar will take place this coming Thursday. It will take place at 12:30 p.m. To get in, you need an invite. If you're on my mailing list, I sent them. If you didn't get it, just on right here at any point during this video, move your cursor up, click it. You'll see an icon. Click on the icon, fill out the news. Now, if you want me to cover specific SPDRs, ETFs, or stocks, please write me. My email address is in that. Once you fill everything out and you get from us the receipt that you've now been accepted to attend the webinar, my email address is in there. Write me now and tell me what you want me to cover. Why? Because there's thousands of stocks, SPDRs, and ETFs in the futures when I cover them. There's basically 40 markets. Pretty easy. I can't do all those charts on the other ones. I can do them if you give me notice a day ahead of time. So it's fast-paced. It's only 20 minutes long. You ask the questions. I answer them. I've yet to run to a point of any of these that I don't have some unanswered questions. We have that many coming in, and it's fast. How do you get to me? It's simple. Again, just click up here. That's simple. Fill out the form. Write me. I'm Ira Epstein. You have a good day.